QuickBooks Pro Desktop 2021 budgeted balance sheet with the help of Excel. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to move on to the budget for the balance sheet. Thinking about the balance sheet, you'll recall that the balance sheet is as of a point in time. So when we think about the balance sheet, we're trying to say, hey, where will we stand after the performance has happened at the end of that time period? Now, we've entered 2 months worth of data into this system so far, January and February. So on the balance sheet, what we want to do is we're going to imagine here that it's been the end of January. January has passed. So we want to take where we stand as of the end of January, consider our performance information, what we've done, our income statement, and then project where we will be at the end of February, which we've already entered into the system. And then we'll do that kind of projection process in Excel, which is where I would do the projection type of process, then enter what we believe we will be at in February into the QuickBooks system, into the budgeting process, as we did with the income statement, so that we can then run reports, including where we expect to be for multiple months into the future, as well as the comparative reports, actual versus standard reports that we can run after the time period has then passed. So similar process we did with the income statement. I'm going to go to the reports dropdown, company and financial. I'm going to take a look at the balance sheet standard. Now I'm going to take a look at the balance sheet as of the end of the first month, which is 01/01/21. I'm sorry, 01/31/21. So at the end of the first month of data input that we have put in place. We're going to imagine that this is the place we are starting at. So this is our point in time. Notice there's no range when we think about the balance sheet. We only have that one point in time. And then we can consider our budgeted performance on the income statement to then think about where we're going to stand at the end of the next period, which would be February. All right, so I could export this balance sheet to do that, but notice if I do that, then if I export this balance sheet, I'm going to have all these subcategories in there again. So what I like to do is to export the trial balance. That's easier for me to work with. So what I'm going to do is I'm going to go to the reports dropdown, company and financial. We're going to go down to, the accounting and taxes, and go to the top item, which is the trial balance. Changing the dates, I'm going to say from 01/01/21 to 01/31/21. So we're talking about for the month ended for January, and I'm looking basically at the balance sheet information as the kind of information I want. We're gonna have to mess with this or fiddle with this a little bit when we export it. So this will be maybe a little bit more confusing than the income statement. So bear with me here. So we're gonna then export this, and if you want a lot more information on how to do this type of stuff, we have a financial accounting course or corporate finance course that can help you with kind of projection processes and those kind of decision-making processes. So we'll just do it quickly here. So I'm going to say we want to create a new worksheet. I'm going to export this thing. I'm going to try to put it into the same workbook that we set up when we made the income statement. So I'm going to go to the existing workbook. Going to browse to see if it's going where we want it to be going. It's not, so I'm going to hit the drop down. It likes to go back to that 10 area for some reason. And I want to go into the budget 2021, I believe, is the one that we want, I hope. So I'm going to go ahead and export it there. So there we have it. Now I'm going to make this large. I'm going to say, okay, so I'm going to pull this to the right. I'm going to make this a balance sheet. So balance sheet, I'll just say BS. And then we're going to go to the first tab, right click on it, and I'm going to delete that tab. Don't need that one. Say delete. Now, once again, I'm going to do this fairly quickly. If you just want to know how to enter this into QuickBooks, we'll do that next time. So this is an Excel kind of practice here, and I know this isn't an Excel course, but I think it's important just to differentiate what I would do in Excel, what I would recommend, and what QuickBooks would be used for in terms of data input for the report there. So I'll try to do this relatively quickly here, and then I'll give you the data so you can put that into QuickBooks if you want to follow along with just the data input into QuickBooks. So I'm going to go to the second tab here. I'm going to say OK. I'm going to remove the splits. We're going to remove the splits by going up top, View tab. We're going to go to the Windows group, remove the splits. Don't need the date, so let's go and remove the date too while we are at it. Go back, got to click back down here before you could go back to the normal view. Going back to the normal view. Don't need these first two rows. I'm going to select the first two rows, right click, and delete them. So we're going to remove those. I don't need the totals down here, so I'm going to click on the total. I'm going to delete those, so delete the total. And then I'm going to switch. This time I like to see all the credits as negatives. And so I'm going to be in balance not by the total debits equaling the credits in that I'm going to have two columns, but rather total debits equal the credits in that the credits will be negative. So the debits minus the credits will be 0. And that'll be my balancing kind of format. So to do this, I want to flip all the credits here to a negative number. So I'm going to right click on the credits. I'm going to copy them. I'm just going to say, let's copy that. And then I like to test it over here to make sure I don't mess up. And I'm going to paste it special. So I'm going to paste it like in a special way. So I'm going to go paste special. And then I'm going to hit the drop down all the way down again because it's double special, super special. And then we're going to go to the subtract, and then OK. So it makes them all negative. So that looks good. Now I'm going to copy that whole thing and I'm just going to paste it over the top of these ones. So I'm going to paste it right there. And then there we have it. And then I'm going to remove this column. It's served its purpose. I don't need it anymore. So I'm going to right click and delete it. Now I'm just going to do some formatting. I'm going to select the entire sheet with this little triangle, right click the selected area, format the sheet. I'm going to say that we want to make this currency. I'm going to put brackets around. Let's make it red. So we're used to that red stuff because we've been doing that. And then I'm gonna remove the pennies. We don't really need pennies in a budget, although it could result in some rounding differences, but I'm okay with that. I would rather not see the pennies. So I'm gonna say okay. So there we have it. And then I can make this a little bit larger by selecting the plus item here or just holding down shift or control, and I'm doing the scroll arrow to scroll up. So that looks good. I'm gonna scroll a little bit down. That's a little large. Doesn't need to be that big, right? I don't know. And then I'm going to say, well, now this is 8, and over here I'm at 11 in Calibri. I'd rather have it at 11, so I'm gonna format this cell with the Format Painter, Home tab, Clipboard, Format Painter, and just paintbrush the entire worksheet in that format. So now it's all at 11 in Calibri, and then I'd like to make it bold. The whole thing's bolded. All right, we want to be bold. All right. So then I'm going to remove column A, not serving any purpose. So let's click on column A and remove that because it is not necessary. So I'm going to delete it. And then we'll move all of the, I'll make this one a little larger. I'm going to move all the negative numbers into here, which you could do by dragging, the good old drag feature. Or you could use cutting and pasting, which you could do by right-clicking and cut and paste. It's actually the same thing as dragging, and you could do that with a Control X and Control V as well. So then, if I want to check if I'm still in balance, I'm going to say, all right, did my debits equal the credits? Let's do the trusty sum function over here. Am I still in balance? I need an equal sign and the sum. Am I still in balance over here? And we'll say yes, so the debits and credits total out to be 0. I'm going to make this black and white there. We'll put the underline here. So there we have that. Now what I want to do is remove now basically the income statement items. I don't need the income statement items. And so everything on the income statement should roll into basically this owner's equity. So if I looked, for example, at the balance sheet, the equity includes basically the net income is going to be part of the equity. So I'm going to say this whole thing here adds up to, if I do it this way, like this equals the sum of the equity down to the income statement. And that adds up to that 84,866. That's what I'm going to make this number, negative 84,166. And then I'm going to remove the entire income statement. Going to delete this whole thing. I'm still in balance then. Does that match out to what we have on the balance sheet? Let's check it out. Pull out the trusty calculator. Trusty huge calculator. It gets excited when I pull it out. 77896 plus the 6269.84. That's going to be the 84,165. The 84,165. So there we have that. So that looks right. So I can remove the income statement. So I'm just going to delete all these income statement items. Right click and delete. And so there we have basically our starting point on the balance sheet. So now we just have the balance sheet accounts. This is our starting point. So then we want to be projecting out into the future. And now the question is, well, how am I going to project out into the future? I can say, well, on the income statement, we often take a look at a comparison to like income to try to make projections. So I might say like total revenue, the revenues up top equals the sum of these items. These are my revenue accounts. So I'm going to copy that across. That's my revenue for the entire time period here. And then I could say then that there's a change in revenue. So from January to February, it went up. That change is this minus this. So this is going to be the change in revenue. And so I'm going to copy that across. So let's copy that across. So that's going to be the change in revenue. So then we can think about, well, if there's an increase in revenue, like if we can say, well, if my revenue was the same from period to period, from month to month, then you would think that my relative assets and liabilities would stay somewhat the same. The accounts receivable and accounts payable would increase and decrease. They would supplement each other as I move forward in somewhat the same fashion. But if we're going to increase the revenue, then you would think that we would do so with more. We'd have to increase our assets and our accounts payable, and our current liabilities would increase in possibly a ratio similar to what it is to what it was prior to that. So we might say then, so we could try to do some kind of ratio analysis to basically figure out what the adjustment would be. So I'm going to be putting this here. I'm going to say this is going to be the January, and I'll say percent. I'm going to say, let's say percent of sales. And so January, we are imagining has already passed, and we're going to use kind of like the ratio analysis to figure, February and possibly beyond. So I'm going to select these. I'm going to say, let's center that, make it black and white. I'm going to add another row so this will line up. I'm going to right click and insert, right click and insert, and shift down. So there we have it. So now I'm basically going to just compare everything we have to basically the sales line. So this is going to be equal the cash divided by the sales line going to the P&L. I'm going to say sales was this amount, and then I want to make that an absolute reference. So I'm going to say F4 on the keyboard, F4, and then so there we have it. So we're comparing the checking to the sales, and I'm going to make this a percent. So there it is there. And now if I copy this down, I'm going to copy this down. This one then is going to be the accounts receivable compared to the sales for January, the 23,262. So I'm just going to copy that down. I'm going to copy that all the way down here. So now we have it basically on a percentage basis, right? And if I was to highlight these, we're comparing everything to the sales. The sum of this is going to add up to 0. So now I'm going to say, okay, let's use that to calculate the February balance sheet. So I'm going to say black and white and then center this. So the sales are going to go up in February, but I'm going to think that the relationship is going to be similar to what we have here in January. So the 354 times the February sales is going to be this item, or I'll just keep it here. It's going to be this, and that's going to be the 105, right? And then I'm going to say the second item here, I'm going to make that an absolute reference, F4. And this is kind of a simplified way of thinking about this, but you would think that, you have a similar relationship, or in other words, if the sales were to increase by that 1,450, you would think you'd have a similar increase, meaning if I was to take this minus this, that would be similar to me taking the 354 times the difference, the 1450, which would be the same, same type of calculation. So this, you can get into a lot of detail, of course, with the projections, these kind of projections. So this is just one way that you could kind of think about this. You would think that the cash would go up in relation to basically the sales, if the sales would have went up. The same for the accounts receivable. So we'll do the same thing. If you make more sales, you would think the accounts receivable is going to go up by the increase in basically the sales here. So you can make a similar calculation here, which is done here. This is picking up the right number, right? P&L E21, P&L E21, right? And so you would think the same would be for the inventory, because inventory, you'd think you'd have to purchase more inventory as basically the sales go up. So you'd have to invest in inventory as your basically sales increases. Short-term investment. Now here you might not think. You might think, I don't think so on that one. The short-term investment, I don't think that's going to change. I'm going to basically keep that possibly where it is. And then, wait, this was prepaid. Let's go to prepaid, yes. Short-term investment, I'm going to say no on the short-term investment. So that I'm going to assume there's no change there. Undeposited funds, that's basically part of cash. So maybe we would have the similar change there. So I'm going to copy this and paste. Notice that we will go back and assume that these items here that we left blank are going to be the same amount, meaning they're not going to change. We're going to say that they stay the same. They're not going to be zero. They'll stay the same. Also note that we will do the plug function down here with these at 0. So that'll help us to basically be able to format this entire thing. And then we're going to go back in and just populate these items here so that they'll be the ones that'll be the same throughout the entire process. Is it there? Furniture and fixture, it depends if we're at capacity. And since we're starting the business, we're probably not buying any more big things because we bought the big things to start the business. And so hopefully we're done buying big things already. So I'm going to say that there's not going to be a change in the furniture and fixture. The accounts payable, there could be a change. Note that we don't have any accounts payable right now, so we'll keep that as it is. Credit card, you would think that it would kind of increase as we do more business. You would think that the credit card bill would kind of go up. These are current liabilities in a similar fashion. Loan payable, I'm going to say no. We got the loan payable to do the startup costs. If we're at capacity in terms of the property, plants, and equipment, then we might not have any more, we're not going to be increasing the loan payable. I'll just keep it where it's at. And then the payroll liabilities, maybe those are current liabilities. We might have more if we have hourly wages and we think our sales are going to increase, we might then increase basically the wages in a proportional manner to the sales. Sales tax payable, same kind of concept. And then on the equity section, what we'll basically do is make this basically kind of like the plug. So I'm going to say there's probably not going to be any more owner investment. So I'll keep that the same. And then this is going to be the plug. So I'm going to be out of balance now by this 59,754, which is the negative. Notice that as we enter this sum function, we have not yet populated these items that we left blank. We're going to do that at the end so that it won't kind of confuse us as we populate everything else. And since we're using a formula, this thing will change automatically as we populate those items. I'll just say this is what I need to basically be in balance. So that's one way that you can kind of start to think about the balance sheet. Again, it's might be a little bit more conceptually, difficult to think about where you're going to stand in terms of the balance sheet, but it's worth taking a look at. And again, the starting point is the income statement. So then I'm going to paintbrush this, and again, you could do a whole lot more analysis in terms of, well, how would I predict this? If you look at our corporate finance course, we get into these kind of predictions into the future. Corporate finance tends to get into the projections into the future. Accounting will typically get into the recording of things once they have passed. So now we're kind of brushing over the two areas here, like kind of projecting into the future so that we can put that information into the QuickBooks software. So then if you were to do this all the way out, I can say, okay, well, if I do this out through, I'm going to say Feb, March, did I spell it right? May, June, July, December. We could do this out. Now, we might not input all this into QuickBooks, but you can see how you can kind of easily start to project this out. So here I can say this is going to be the 354 times the sales for March. So there's March. And then the sales for March, I'm going to make this absolute F4. And then I'm going to copy this just to the same areas. I'm going to copy this to the same areas here. There we have it. And then this will be the negative sum, the plug. The negative sum will be in the equity section. And then that will be that. And then you can do it for April. This is going to be equal to this times the April sales. So April sales, so April. And then I'm going to say F4 for April sales. There we have it. I'll just copy this down, copy, and and then just paste in this where applicable, paste in here, negative sum, and that's the plug. And there we have that. And then May is going to be equal to this times May, profit and loss for May. And then, oh, hold on a sec. That don't make sense. This is going to be equal to this times the May sales. So we're going back to sales, and then we're going to say F4, enter, and then copy. Let's see if I could do this all the way across first. I'm going to say this is going to be equal to this times the June, F4, enter, and then July is going to be equal to this times the July, and F4 and enter, and this is going to be August is going to be equal to this times the August. So I'll scroll over August, and then F4 and enter. Note that as we're going through this checking account column, we picked up the wrong cell. It should be the 21, and we picked up the change in a couple of them, 22. So just make sure that when you're looking at this item from the P&L, you're picking up line or row 21, and you can kind of review that after you're done. So we'll pick that up, and we'll remind you again at the end of the presentation so you can kind of review that point. And then September is going to be equal to this times, and then we're on September, F4, let's say tab this time. October is this times P&L, October, F4, enter. November equals this, whoop, I forgot the equal sign, equals this times November. I'm slowing down. F4, tab, and finally December is going to be equal to this times the December, F4, and enter. So now let's copy all these. I'm just going to select all these, going to copy and paste it here, 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 these two, those two, and hold on a second, not this one, not that one. This is going to be the negative sum plug formula. So this will be the negative sum plug formula that we can then copy across. All right, we can copy that across. Now something, it seems this is not a negative sum. There we go. Now I can copy that across. And there we've got that. And then the debits and credits should equal 0 across as well. So there we have it. And then we can equal 0 here. And then we could, let's put some brackets around this thing. That'll make it look pretty. So I highlight this. We'll put brackets around it. Home tab, font group, and brackets. Much better. Very nice. Now I'm going to go back in and I'm going to populate those items that we think are going to stay the same, meaning they're not going to change as we have an increase in sales. So like these items that we left blank, I'm just going to say this equals the amount here. It's not going to increase with related to sales. And then I'm just going to copy that across. I'm going to go to the next one and say equals that one. That's the way I kind of like to do it. And then I'll just copy this across. So that's going to be copied across. That'll be the same. Now this will change the plug formula we had down at the bottom. This formula, because we did a formula, will just populate in and of itself. So that's fine. And so I'm just going to do this for this one as well. Now the depreciation should have some change. We would know what it is based on the depreciation expense. But I'm just going to assume it's the same here. So I'm not going to make an adjustment for that. And then we're going to say that we're not going to be purchasing any more furniture and fixture, even though as sales increase, we're not going to need more furniture and fixture to do so, to increase the sales. So that's going to be the same. And hold on a second. This should all be the 98. So let's copy that across. So I'm going to copy that across. And then we have, this is just going to be 0. So that's fine. The accounts payable hasn't changed. So we'll copy that across. And then we're going to say that the loan payable, we're not going to take out another loan, so that's going to be the same at the 72. So I'm going to copy that all the way across. No change to the loan. All right, and then opening balance, we don't even need that area. So this investment account, we had changing. I don't think that should change. I'm going to keep that one the same as well. I don't think we're going to keep on investing. So I'm going to say this equals the 65,000, and then I'm going to say this equals the 65,000, and I'm just going to copy that across as well. So let's keep the owner's investment the same, and then kind of there were a couple months where I picked up the 21 instead of 22, the change, or 22 instead of 21. So it was July here, and it looks like, and you could tell because these numbers are going to be all smaller, right? Because I picked up line 22 instead of 21. So it looks like November. So I'm going to have to copy that down to the relative cells now. So I'm going to say, okay, now I changed this to 21. I'm going to copy this down. I'm going to copy that. Now I don't want to overwrite this one because this one's the same. So just the ones that are changing. So I'm going to say Control V here, and this one Control V. These stayed the same. So this one is changing. So I'm going to pick that one up. This one stayed the same, and then these two are changing, and then this one stayed the same, and that's our plug formula. So I'll do the same over here. I'm going to copy this, and the green items, I'm just going to paste on the green items, and I think that's good. Now, I know I did that pretty quickly here, so this is just a conceptual kind of framework. You could spend a lot more time kind of thinking about how to project this stuff forward, but as a general idea of it, we're just going to be entering the first 2 months into our data input for QuickBooks. So I'm going to right-click on this, and in that format, we'll be practicing kind of the accounting side of things, which is, you know, the input of the projection into the accounting system. So if you're following along with this and you want to check your numbers, the plug formula down here, the one that's in the equity, that's the number that you can use to kind of check your numbers. Now, we're only going to be entering March and April, or February and March, into the system next time so we can practice the data input. So those are the two that you'll basically need, and even that you don't really need it for the data input process because we'll provide you the information, both the Excel sheet, and we'll just be able to see it when we record it. We'll be going back and forth from this sheet. Note that when we do show the next presentation, there's going to be those adjustments hadn't been made, so we had those errors in those 2 months. I think July and November will not have an effect on the data input, but if you notice that when you're inputting the data, then don't let that bother you. We went back and adjusted that. So here's going to be the numbers that we have down here, down below. Again, if you're interested in thinking about how you can do these projections, we obviously did this really quickly just to give an idea of how you might think about the projections. But this is more of a finance thing, so corporate finance, or that we have a corporate finance course that gets into ratio analysis on how company has been doing. You can use it for, and then you can use those ratio analysis to do projections such as this, like where somebody will be or a company will be in the future. So you can, if you're interested in that projection in the future, that's going to be more like corporate finance, which is often concerned with analysis of projections into the future, or managerial accounting, often with projections into the future. Then the accounting side of things has to do with the recording of the data so that we can data input. Budgeting has to do with both of those concepts because, of course, we're projecting into the future based on past data. Based on the accounting, we're projecting into the future using some kind of ratio analysis. And then we have to do the data input of that budget into the QuickBooks system, which again is to do that properly is more of an accounting kind of side of things as well. So there's obviously overlap between corporate finance projections and accounting, you know, the actual recording properly of financial statement data.